All right, guys, think I can eke one more out, and before my energy kind of just collapses. So the time is 3:15 a.m., and I still got energy, so while I'm still young, so to speak. So today we're going to be covering, or tonight, or this morning, whatever time you see this in, Coupang. Okay, so Coupang is a Korean one. It's been one that's been having chatter in the Discord, and I thought I'd take a look at it, and it intrigued me. We don't see moves like this every day. Well, no. This year, we've seen tons of moves, or tons of companies move 20% in a single day, okay? I think you guys can all at least name 2 to 3. Actually, that's a challenge for you down below. Name one. No. One's too easy. 2 to 3 companies that have moved 20% that you remember off the top of your head, and I want to see how many people were spotting those. All right, so Coupang, and we'll showcase the price action here. It is down 22.34% here today. After hours is up 1.6%. We'll actually talk about what happened. What did the company say? Did someone die? Like what the heck occurred? Why would it fall 22% in a single day? And just an ouch moment real quick. And this is not the first time that we're going to be discussing JP Morgan analysts here. And I'm not going to try to do too many shots fired, but there's a particular very large YouTuber who is an ex-JP Morgan analyst, and kind of this will be a lesson to derive that argument from authority simply doesn't really necessarily work, and why you should not, and I think my audience doesn't need to really get reminded of this, but you should not trust someone just because of claims they make of a workplace. Judge them precisely on the arguments presented and the information presented. And, I have faith that every viewer and the average person is, over time, given enough time, I guess, capable of coming to that determination on their own. So they said this at the time, and this was posted on May 6, 2022. Now we have right here, shareholders are enjoying a rebound on Friday. So this was last Friday, 6.6%, only to fall about 22% here today. So a little bit of an ouch moment there, and an oopsie. The analysts were, not so correct. And I know there's a lot of other creators like Sen Carlin, who I do respect. He's actually pointed this out, that analysts have varying degrees of accuracy depending. And analysts that are really, really good are probably not going to be working there. You might think like a JP Morgan analyst job pays a lot. It does pay a lot, but not really relative to the work. And there's more areas within the financial world that do pay more. I think it's a good stepping stone, though. All right, so taking a look at the 1 month, though, it is down 45%. 6 month, it is down 68%. Year to date, it's down 67. Full year, down 74. 5 year down 80, and then all time, it's down 80. So it IPO'd like what? Whoa, oh my gosh. All right, so let me just kind of set the tone here, set the mood. So Coupang is in Korea. So they are a South Korean company. They actually boast that they have the majority of the Korean population located to one of their distribution centers. But let us remind each other, or let's remember, just to like pull up South Korea, it's not really a big country. So just by stating that you have the majority of the South Korean population nearby a distribution center isn't really something to boast about, especially when you have the likes of Amazon that is doing that in the United States, and Canada, which is a much larger landmass. Okay, so just to say that. And one other thing that I want to actually highlight is that Coupang doesn't have the same business lines that Amazon does. They have a logistics business and all that. Yes, they do. They have the online retail, but please don't say that they're the Amazon of Korea. Amazon is the Amazon of the world. All right. So what I mean by that is Amazon has particular business lines, which again, I've talked about, especially if you checked out the Amazon video. I have a high appreciation for the AWS portion of their business. So that part of their business is so integral to the actual long-term success of the company, and actually provides a massive drop of cash flow to the business. And that's what we want to focus on when we look at something like Amazon. Something like Coupang doesn't have that same presence. Now, we can say, well, it has this e-commerce thing, but it kind of irks me when not irks me because it doesn't upset me, but it bothers me a little bit on the nose that when someone says, okay, well, like Jumaya is one that I haven't talked about, but Jumaya, the Amazon of Africa, or Coupang, the Amazon of Korea, or I've heard Alibaba, the Amazon of China. Well, that one does have a cloud business. That more is like an eBay, but getting ahead of myself. JD is more like of an actual Amazon variant. Now, Alibaba does have Tmall, but regardless, the point is Amazon, people like to compare it to all these things, and the reason why they do that is to try to perhaps draw up attention. Coupang, I don't want to espouse malintention, but perhaps those bankers were trying to kind of sell the stock a little bit when it was IPOing. So, I can't fault them for that. They want to get their money there. So we're sitting at $9 here today. I think it's important to kind of get an idea. And something I actually came across was this individual. You guys may know him because he's quite a large channel. And it's this guy, so Rare Liquid. So Rare Liquid, I looked up Coupang stock just to see, again, I do that sometimes to see what are other people saying. And I was curious, and I saw the title is like IPO analysis from a Korean. So I was like, oh, a Korean. I wanted to hear your perspective. So I listened through a little bit. Then I, found out a little bit more about this guy, and he provided some details about his work and experience. And so supposedly, I'll take his word for it that he was. He looks like he's a smart guy, so I no doubt to believe that. But he was an analyst for JP Morgan, and he provides some interesting perspectives on cryptos, whatever that is. He provides these perspectives here and there, and I went through this, and basically what I concluded from this is it's pretty much more like bullish content, so to speak. So I'll go over some aspect. So a lot of the video was like kind of repeating mantras from the business and like saying, oh, they do this, they do that. And I did see that this individual has formed or created, typical DCFs that you would do in like a finance class, but, that you would actually use it in work too. At least, it appears it's almost equivalently designed. A lot of unnecessary stuff, but that's kind of, I would probably expect that from JP Morgan, but not to say shots fired there, but to say the least, it was interesting. So some perspectives here were shared. Now we'll kind of go over Coupang and some opinions I might have about Coupang. Coupang's been kind of down with the rest of the e-commerce stocks that we've been talking about, such as Amazon, Wayfair, and the like. So when you take that all into consideration, it makes more sense with what's kind of going on. We do see perhaps a global slowdown, global supply chain issues. What's going on in Asia is kind of a big deal for something like Coupang. Coupang's going to be heavily exposed to that. And we want to actually say they are the largest marketplace in South Korea. So they do dominate that market. That's not dominated by Amazon. But I don't want you guys to, if I see any of you guys say that this is the Amazon of whatever, stop. Well, you can do it to try to trigger me. You won't trigger me, but try. I dare you. You can check out their website right here. So this is Coupang. I set it to English, but they have this basically the subscription service that you pay. I think it's like $2.50 a month, $30 a year. They call it Rocket. So it's like having Rocket status. You can see what you can buy here in Coupang, basically everything. You can see some of these are actually famous Korean actors. I think I recognize him from somewhere. I don't recognize that top guy. But yeah. So I think I recognize him too from somewhere. I don't know where I recognize him from. That's definitely not Korean. But yeah, all these, like, you can pretty much buy whatever you want here. Can you buy cars? Car accessories. I was like, what? You can buy trips. Okay, so that's cool, I guess. And so they basically dominate Korea. So the limitations are, or the difficulty is, the expansion beyond Korea. So Coupang, from my understanding, was trying to expand in Southeast Asia as well. It's a little more difficult. It seems like all those guys want to develop their own thing. And so Amazon has a massive advantage because it has dominated the United States, and the United States is pretty much the richest and wealthiest country on earth. It is dominating Europe, the second richest continent on earth, and also Canada, which is basically United States 2.0 in their own respect. Also very wealthy population. So Amazon has that advantage. Coupang, again, South Korea is wealthy, but not as wealthy, but still wealthy within their own respect. their ability to expand into neighboring countries might be limited, and you also have to consider the fact that Coupang expanding into something like United States would be rather difficult, and especially when you consider that Amazon has so many loss-leading businesses with regards to how the AWS section of their business is able to kind of front a lot of the costs or bear a lot of the costs for their other businesses. So they're able to compete very heavily in many different aspects. So I think that that's important to note. Now, I'll kind of bring us over to the 10K here. So let me actually plop it over here. Okay, so let's see. We'll zoom in for you guys, and I'll kind of try to be descriptive because I have to remember that some of you listened over the phone or when you're running. So I do read your comments. You see, I do read the comments. I mean, I think it's obvious. You guys see how much I respond. So current assets. Okay, so what I want to get from here is cash, restricted cash. I'll take that and kind of add those together. So we have about 3.7-ish, 3.8 around there. So it's 3.8 billion between those two. So very good, strong growth in their cash position. Taking a look at that debt, long-term debt's actually coming down. So as a balance sheet perspective, very good, very good. That goodwill doesn't seem like it's crazy abusive there. Long-term restricted cash, that's fine. Accounts payable, yeah, that's fine. That's fine. Deferred revenue, that's fine. Short-term borrowings. Yeah, well, okay, that's fine. Well, that's the short term or the long term. Current. Okay, so all that looks good. All right, so let's take a look at so net retail sales, strong growth. Okay, like to see that. Very strong growth, actually. Wow, really strong growth. Incredible. The Korean people are just shifting over online rapidly. Cost of sales, okay, that's showing signs of scalability because relative to the growth over there, they didn't grow as much in the cost of sales. Awesome, great. That's going to show up in the gross profits, total operating costs and expenses. Okay, so still negative. So operating loss. Okay, so that's not good, but they're showing signs of scaling. So they're basically there. They're getting there. So I have faith that this company is actually going to achieve operational profitability fairly soon. And that's a faith statement. Now, taking a look at the cash flows. Okay, purchase property. Okay, so negative in cash flows across the board. You know, he's saying they're spending to get more and more customers. They have growth capex included in there. So all well and good. Depreciation, where's that line item? Depreciation. Okay, so I would say that, yeah, there's probably a decent amount of growth capex in there. So the cash flows probably, if excluding growth capex, will probably be closer to actually close to flat, if I'm being honest. It'd be close to flat. So that's well and good. All right, so let's actually go over to the model evaluation and kind of pencil out some ideas of what we might be expecting from here. So I'll see you guys right there. Well, actually, I'll just take us right there quickly. Who the heck is texting me? Who the heck? Sending me a property? Okay, so let's see. CPNG. All right, let's go. Let's see what we pull up. Cool. All right, price target 21.37 by the analysts, the analyst community. Haha. So implying 128.56% upside. We are going to kind of put this down to the market average right there. That's fine. Now, I'm going to do an unprofitable analysis because you guys can tell it's negative on the price free cash flow and a PE. So we're going to have to kind of pencil out the possibilities or potentials for it to achieve at one point profitability into the future. So I'm going to say that it achieves a long-term profitability of, let me see what I wrote down here over here. All right, so I'm going to just estimate about 10.3 there, and that's kind of, so they're not going to achieve the same of eBay. So eBay is about 18-ish%, and actually something like an eBay can generate, about 18% margin on that front. And you got to understand that they don't have the same logistics networks expense that you have to consider. So while you do take away from yourself the margin potential, you do in fact add a more vertical integrated experience with your customer, which is perhaps a little bit better. So, but they can always improve on that with technology. Technology advancement can, of course, improve that 10.3% further, but that's just a speculation at that point. Let's try to be a little bit more conservative. Now, getting to the profitability year, I'm assuming it achieves somewhere around 5 years. So basically the model is going to do on the back end is going to build up to that based on the assumptions I then generate. And then, so I'm going to indicate to the model that I do want to, in fact, it to do those calculations in the back end. And now you can kind of see how it does change the valuations. So right off the bat, you can start to see that if we had implied zero margin of safety or anything like that, we are at this point a buy if you think, it's going to grow at about 5, 10, 12, 15% on that front as well. So that's interesting to note. I will say that, if you do desire a greater margin of safety, you'd have to assume, around a 12% growth, which is very possible, I think, based on how much they've been growing. And I'll actually tell you guys right now, they are growing at about 30, 33, 50-ish percent. So I think they grew 53% more recently. They're expected to grow about 33%. And yeah, there's actually not really any estimates here. Cash flows are probably going negative further and further. And you see it's very cyclical. There's up and down because they're doing a lot of investments, so that's fine. Shares outstanding, I don't see that they're diluting too much right now, but that could change. So we'll actually see for now that we're going to say no dilution whatsoever. So again, those are the growth rates we kind of are penciling out right now. These are from the previous analysis, so I'm going to be erasing most of these, but I'm going to keep I'll keep like 15% down the middle, and because they are still like a fledgling company. 20%, no, not 20%, sorry, 20% I wanted on the higher end. Actually, that is the higher end. What am I doing? I was thinking the reverse way. And then on the high end, I'd say 25%, so a deceleration on average from the 30%, but in the 25%, and then applying a 2% probability that they maintain that. But it is possible, and so it's there. I'm trying to also be conservative again, so the goal is to be a little bit more conservative here, and then I think they can achieve 10%. I think that it's very improbable that they grow at a lower rate they decline from here. I do think that's improbable, but we can put that in if you really wanted to. I don't think it's necessary. So these are the growth rates I kind of assumed, or I kind of modeled out. And when I looked at the business, I think these are very possible when you're looking at the market size of Korea, when you look at the potential that they could be successful in another country, that's also there, and the ability for them to achieve greater and greater efficiencies. Maybe you guys are thinking I'm a little bit too aggressive here, too conservative there, and they might achieve it in 3 years from now. That does change the valuation a bit. You can kind of see what happened there. If they do, however, issue some shares, you can kind of see how that, again, kind of worsens the outcome, but they still have some room for them to do that and us achieving that rate of return that we desire. So basically what I'm seeing here is at the previous price, had I done this analysis, I would have not liked it. But now it is getting more interesting. Okay, now it's getting more interesting. Before, it wasn't really interesting for me. Had I done this analysis before, and we're using the numbers here, the price before, if I remember, let's actually go back here. So it was at $30 at the end of 2021, and before this drop, let's actually come to this drop. So there was a drop here where did they say it was oversold? I think here. Yeah, this was JP Morgan saying it was oversold after all this. And what was the model saying? It's 13. So that would be here, the middle assumption. And so they would be saying, I think they would be believing my more aggressive assumptions, which are still possibilities. I think based on what I researched, these are possibilities. They're decent possibilities, but I wouldn't say it's 100%. Definitely not 100%. So you got to be careful. But I'd say now we're approaching the part where it starts to get interesting because we're approaching the 10% amount. Now, if you require a greater margin of safety, we still have some more room to kind of fall down before that becomes a good proposition for at least me. If this was the desired margin of safety I wanted. Now, again, analysts have a buy rating with a price target of 21.37 within 1 year. That implies 128.56% upside. You see what I'm saying about analysts? So they can be a little aggressive, but maybe I'm the crazy one and they're not the crazy one. That could also be the case. The sentiment score is actually really positive. So I actually wanted to take us over here. Okay, so just 2 mentions more recently. But taking a look at the articles, we can kind of see what they're kind of stating. 7 risky stocks that are risky stocks. Okay, so that's a little bit of a dig there. Is Coupang stock good buy for the long term? E-commerce stock is a strong buy. Okay, well, who said this? Seeking Alpha. Okay, so that's a Seeking Alpha review. So let's actually come here. Let's actually click here and kind of, okay, what are you saying? Coupang is, okay, so more, okay, revenue growth equal better. The Asian investor. So he's got the perspective there. While Coupang is not yet profitable, is expected the e-commerce will deliver positive EPS in forward. Huh. Huh? What did we assume? What did we assume? 3 years? Okay, so 2022, 2023, 2024. Huh. Huh. Just kidding. But yeah, it's interesting. That was actually a happy coincidence. All right, so yeah, so that's interesting. All right, shares are attractively priced, 61%. Okay, so it went down, therefore it must go up, and grew 50% revenue and expected to be profitable. This is probably the one that's probably the most compelling. So because that's the most important. Well, that they continue the growth, they maintain the growth. Okay, so the addressable market, I see that they're stating this addressable market, all well and good. Korea, CAGR, okay, so 11%. China, US, UK, Japan. And yeah, okay, so that's the CAGR, basically saying Korea has a lot of room to grow because of this, right? This is what you're saying, CAGR, 25, yeah. Are you sure that's, yeah, so that's just South Korean e-commerce. Yeah, that's pretty good. That's pretty good size. Massive potential for revenue growth. So basically, if they continue to completely dominate in Korea, there is, a good amount of potential there. So like I said, it's less risky than it was before. And if we actually return to the model, let's actually try to analyze this from a balance sheet perspective. Yeah, it's not really at risk of any form of bankruptcy for now. Now, solvency ratios, we have some improvement there. Interest coverage, pretty good. Everything's pretty good here. Current ratio is pretty good. Now, gross profit margin is pretty good, improving. I don't know if this is anomaly or whatever, but, it's maintaining stability at least. ROE, ignore this because it's negative right now. ROIC, ignore this because it's negative right now. Earnings quality, Well, you know what? That's actually fine because of the nature of their investments and what they're investing in. So that I'd expect that to actually come out as a bad measure there. So can't really get too much clarity from those ratios back there, but it's fine. All right, so based on this, I think my final thoughts on Coupang, interesting risk reward now rather than before. Am I buying it? I'd have to look at it a lot more, but I saw that some of you in the Discord were talking about it and requesting it and asking to kind of see my perspective on that. I saw that, and I do, I check in on the Discord quite frequently, see what you guys are talking about, see a lot of wonderful conversations between people in both the free version and then the paid one, and so I see a lot of ideas being shared, and that's the goal of it, and I'm very happy. So yeah, I think that, if it falls further, I might take a deeper look at it, or I might open, a small position in the more speculative side of the portfolio, or, I could see this actually being a non-speculative position, by the way. I'm not saying that it's entirely, by nature has to be speculative. It's just more of the uncertainties that I have within that market that I don't quite yet grasp. And so, but it has de-risked by quite substantially. So that's my closing thoughts there. All right, guys. If you guys enjoyed this video, feel free to leave a like. If you're not subscribed, go ahead and subscribe. Just come back and you'll see probably a stock that you probably were more interested in than this one, or maybe you are interested in this one. And again, if it provided value, consider, smashing the like button. All right, guys. I hope you guys have a great one, and I'll see you guys in the next one. This is the last video I'm making tonight. I'm definitely going to bed. It's almost 4 a.m, but I get to sleep in, so it's all good. And yeah, some of you, my European audience, you guys are awake right now. So I'll see you guys in the next one. Bye.